All right, welcome to Office Hours Arbitrage number 6. So I'm not doing an interview. I'm not doing any crazy presentations because I've got to reset expectations a bit. So that's what's going on. So I'm going to do a lot of questions and hopefully we can just have a conversation this week. There's been a lot going on though. One thing I didn't get to touch last week that I'd like to discuss was the changes in reputation calculation. So everybody got re-ranked, at least historically. And I noticed that my main account ended up being in the top 25 for about 2.5 months. So for me, it was a net benefit. But I ask you, did everybody make out positively or was it net neutral? What was your impression of the change? Feel free to unmute yourselves. I like a conversation at this point on.
This is Joachim. I'm still early on, but I dropped a few ranking points from like 625 to 700, I think. But, it's still early on for me.
Yeah, and I think it has a lot to do with if you do not already have 4 or more weeks in a row of submissions, then you weren't averaged across like we used to be.
I see, okay.
So cool. That would increase your volatility because it was based on less than 4 rounds. Now, this reputation is based on the weighted average of 20 or something like that. But I had a really good ramp up from, I guess, October through March. And so for me, I'm losing all of my good rounds every week. And so my rank is going to decline as those positive rounds fall off. So I'm watching that with bated breath, if you will. And then also today we noticed that we're hitting the 250-day cap. So I didn't notice that much of a difference. I did a rough back of the envelope calculation and I didn't see that I was below 2% payout. But somebody said they were. Anybody notice a difference in their bonus today? Anybody that earns it? No? Okay.
Yeah, no, that's probably going to be a concern. Like I have a few concerns about the new payment structure, and it's like the biggest one is like what's stopping me from, like, say, making 9 accounts that are the same, and then staking 1 Numerai on each one, and so that way it just like it pushes out like people. Like for instance, I have that issue with like if you see the leaderboard. There's an account called Set Ernie or something like that, and I mean the stake is negative 0.0066, and that's ranked 9s, and my highest ranking model is 11. So if that account wasn't there, like I would be ranking 10 and I would get a bigger bonus, right?
Yep.
And so, but that account is still there, and it's not like contributing like by staking. So that's a concern that I have. I have no problems with that account whatsoever. But if a lot of people start like doing that, then we might have a problem.
No, I agree. It is a concern. Although we never saw it with the 3 account rule. So it still would have worked with 3 accounts if you cloned your account twice and had 3 of the same. If it was performant, like for instance, my own model, if I had cloned it 3 times when I was in the top 25 for 2.5 months, I would have locked in that spot for a long time. And then when I was number 1, I would have split it 3 ways. So I think that it's always been a risk, but I don't think anybody's using it because diversification benefits. But with 10, that kind of throws that out the window, right? Because it's really hard to diversify across 10. It's much easier to diversify across 3. So I'm interested to see how that plays out. SSH says, I believe same percent of bonus as before. My most staked account was always the worst. Okay. I'm not sure I get the context on that, but thanks. I believe same percent of bonus as before. Oh, you think you got the same percent of bonus as before, but yet your most staked account is always performing the worst. Yeah, so like that's kind of to my point though, right? So if you're throwing a lot of numeraire at what you believe to be your best model, that could actually play against you. yeah, that'll be interesting to see how it all shakes out. I've proposed in the past a way for there to, it's called McNemar's test. You can score two models against each other to see if they're actually the same model or not. And it gives back a statistical test that says if they're actually similar. And I've proposed that as a way to kind of sniff out if somebody's actually running clones of something, and also to prevent people from just submitting the example predictions. Because, you know, we've seen integration tests do extremely well in the leaderboard. And so just stake on integration tests. You're almost guaranteed to be in the top 100, right? And if I do that 10 times, that to me, it sounds like an exploit vector, because you can just download the predictions every week, upload it 10 times, you're good to go. I presume that in the back end, Anson and team are working on ways to mitigate that as a risk. I would just have to hope so. But yeah.
Yeah, so the problem with that, if you want to, if somebody's new and wants to just submit example predictions, the problem is that how I feel things are going is that MMC, meta model contribution, is going to be a factor into that. So they can easily just say, I mean, you can stake say 100 Numerai on that strategy, but it's a bad strategy because there's nothing stopping them from saying, okay, we're going to enforce correlation again with example predictions, in which point 100 days from now, then you're going to lose everything. So it doesn't make much sense to me. So I mean, trying to game Numerai, in my experience, just from observing others, works for a little bit.
Yeah.
But then they figure it out and say, okay, these guys start gaming us. So then they change the things, and then you have to go back. So then you kind of have to think, what am I going to do with this competition? Am I always going to be trying to game them, or should I actually make a model that makes sense?
Yeah,
so
no, you're right, Kino. And they've shown in the past that they're willing to make big moves to prevent attacks, but it's been reactionary, and the damage is done. People adjust to kind of defend themselves against the attack vector, and then we have a new normal is what happens. But in the rules of the documentation, at least, it says if we suspect that you're attacking us, then we have the right to ban your account and not pay out any numeraire. So I hope that would be enforced in a situation like that. But also I'd want to make sure that there was some kind of test to verify that somebody was just submitting example predictions, if that's a true attack vector. But yeah, so I opened it with how's everybody liking the new reputation score change, especially now that the band has been widened so that your submission correlation is your payout percentage. I kind of like that. I did a quick analysis on my own account, and my average submission correlation is 0.81%. So I skew just a little bit positive, and that's forgetting the bonus that's paid out. So that's net positive, because I was concerned that it would be skewed negative, because in the past that was the case. The data indicated that we were more likely to burn than to earn, but it still needs some more analysis for sure. Michael Oliver, thanks for joining. Since I interviewed you, I'm now going to refer to you as my experienced user panel along with Vor. Have you done any kind of data exploration on the new system?
No, not a ton. I mean, the one thing that I kind of noticed that is actually interesting is there's going to be less day-to-day volatility just because the smoothing window is smoother. It's more like a Gaussian-ish shape, but it's actually a little bit narrower, the bandwidth, because before it was 100 days weighted equally, and now it's actually 100 days not weighted equally. And so the just the sort of bandwidth of the kernel is a little bit narrower. So the kind of, you could sort of expect, without the noise of the day-to-day fluctuations, you can actually expect to move up and down a little bit faster than before. Potentially, just because the sort of effective width of the things you're averaging over is a little bit narrower. That's just, yeah, there's just something I noticed. They actually changed in the documentation. Before they, at some point they had a window that was actually 24 weeks, and with dropping off, and so the weighting added up to 20. but they changed it so now the weighting actually adds up to 16. So that was just something interesting I had noticed, and it actually changed the documentations without them ever saying anything about it at some point. The reason was, yeah, it didn't. If they did it to 24 weeks, then we'd have to look at our bonuses 24 weeks back in time.
Right.
So it makes a lot of sense, but that was just something kind of interesting. I noted that, yeah, we might be a little more. It reflects current regime a little bit more. That's in some ways more strongly than the previous one. Which, yeah, just a kind of interesting point I noticed. But that's only kind of, that was just something I noticed. No, I didn't really need to do analysis on, but yeah, just from the math, it should work out that way.
Yeah, it is more of a wait and see. I did like that everything was updated historically too. So
Yeah.
we got some insight into the change. I wish I had captured the old data so that I could kind of compare it visually, because I used to use the legacy to do so.
I feel like I actually would have made more money if we had before, because I feel like my rank was jumping up and down out of the top 10 for a while, where with the new smooth one, it stayed in the top 10 a lot longer. And so I would have actually ended up making more money for that period when I was in the top 10. But yeah.
Was that in the period around Christmas?
It was somewhere around the beginning of this year, I think. Yeah.
Yeah, so you're probably tangled with me up there at the top.
Yeah, exactly. And so, so yeah, the sort of smoothness would have made me more money, but
yeah, likewise. I think also the downside will be more persistent. So if it was sticky on top, it'll be sticky on the bottom. So I'm concerned because I'm floating at like 89 overall, and I'm not gaining, even though I have pretty positive performance. And so it seems like if I was sticky on top, I'll probably be sticky in the mid-range somewhere. But that's no surprise. I've mentioned in several of the office hours that since I include validation data in my training set, I have noticed more volatility in previous tournaments. So I kind of expect this. But with my expanded account usage, whatever, more than 3 accounts, I've since created clones of my top 3 models to do just the training data and omit the validation to see if that kind of lowers the volatility. But it's going to be months before I can really determine if that worked or not.
Is there any reason why you would think that would be the case? I mean, it's just like excluding a year of data as far as.
So yeah, it's exactly what it is. But what if this particular year is very much like 5 other years, or very extremely unlike something in the middle? If you look at the data, what is it like? Era about 60 through 90 is pretty tough, right? So if it's nothing like that, then I'm weakening the signal from those tough eras, and thus I'm increasing my volatility. That's my hunch. I have no idea.
I was just saying that there's, I mean, following that train of logic, you could just start excluding errors at random. I mean, exclude random errors, exclude random years, exclude blocks of errors. Yeah, I mean, the first few eras are clearly different. They have fewer data points for one.
Right.
And so, yeah, I've wondered, I haven't done it, but I've always often wondered if excluding some of these early ones that are so far long ago might be a good idea.
Yeah, and recency matters, especially if you're trying to capture regime changes. So when Richard kind of let it slip that the validation could be seen as additional training data, I said, oh, well, there we go. So that's recency. So I added that, and I did consider dropping out like the first 12 eras, although I see that as a risk. I try to look at this from the point of they've given us the data for a reason, and they're not trying to mislead us, and that has served me well in the past. So yeah, but again, the validation data as additional training data, I have found through my time in the tournament that it increased my volatility of performance. So yeah, I would punch higher, but I would certainly get punished harder too. And when I did not train on validation data, I found my model was a little more smooth, but it didn't punch as high. And so I haven't figured out what's more profitable. So yeah, I don't know. On the upside, I found that I did really well, just same as you when we were fighting it out at the top around New Year. But I just don't know. We don't have enough time with Kazutsugi to really extrapolate and see how that's going to play out. So I also found out the Mikan has joined us. He's an OG. What do you think, Rudy?
Yeah, I concur with you with the validation data. I've seen exactly the same thing. When I included the validation data, my thing was all over the place. My scores were, when everyone was doing well, I was doing really well. And when everyone was doing bad, I was doing really bad.
Yeah,
So,
okay, that's exactly my experience.
Yeah.
Yeah, and I think, gosh, I don't remember who I was talking to or when, but somebody just pointed out that if you do really well and you include validation data, it's just an indication that the current live data is just very similar to validation. That's the biggest takeaway. And so you're going to have an advantage. I think that would also show up with MMC contribution. So if you train with validation and other people don't, then those models will become performant. But again, that remains to be seen because we're still not paid out on MMC. And I haven't even decided if I'm going to stake on MMC because I find that to be very volatile as well. So I'm just looking down, looking for people to unmute themselves, see if anybody wants to chime in.
MMC is going to be difficult, I reckon.
Sorry, say again?
It's going to be a more difficult tournament, I reckon.
I think so. If it's a side pot, that'll just be fun. I don't know about trying to target MMC because of if I switch my model to capture MMC and other people do as well and we stumble into the same solution, then our share of MMC is going to decline. And so you have to choose between stability or chasing MMC. I think it's very difficult to be performant and have high MMC over time. I think that's going to be a real challenge going forward. But I'm very interested to see how it all plays out, especially with all these crazy genetic algorithms that Bohr is running.
It might be more valuable for Numerai, though.
Well, if you think about it from a hedge fund perspective, it absolutely is more valuable for them to get 1,000 completely different but performant models than to get clusters of 3 different types of models that are performant. Because then they're really, creating a meta model on 3 different models. That's unavoidable, I think, because of the nature of the data. Where it becomes unique, I think, is in what Richard and I talked about last week or the week before. Now all the different office hours are blending together because this is the 6th one. But Richard was saying that, if you treat the features differently, maybe drop a subset out, do a different subset of eras, do different blending techniques, that's where MMC can become useful. And so I think there's enough variation in the data in order to capture MMC. I'm just not sure there's enough variation in modeling techniques to also achieve that. And with the slow iteration of the tournament, it's also very risky to deploy a bunch of different modifications of the data and wait and see if they're performant long term. So it's all very fascinating. I still think that the change is net positive. But yeah, we'll see how it plays out. Bohr says MMC is scary volatile. I completely agree. And Bohr also says he's in a tent camping in the garden. That's pretty awesome. You want to talk about that, Michael? This linear model has performance and MMC almost perfectly correlated. Let me check.
Yeah, you should look at the submission. It's been really interesting. It's just a linear model trained on a subset of eras in a sort of automatically determined way. And just since MMC came out, I've been really curious to just how close the MMC and the actual model performance are line up every. It's weird. I don't know completely what to make of it. It's from a model that was it's basically half of a mixture of linear regression model. So it basically tries to find the eras to best go with 2 different linear regressions. So yeah, so it's sort of like a regime in the data, it seems. The fact that the MMC and performance look so similar. I'm not exactly sure what to make of it. I just thought it was really interesting.
No, it is. And also your correlation with the meta model is similar to what I see with neural nets. I don't know.
Yeah, and this is just a linear model completely.
Yeah. Is it just linear regression, or you probably won't tell me more than that, will you?
I mean, it's a mixture of linear regressions. So
Okay.
it's basically it's automatically parcels out the errors to 2 different linear regressions. So this is basically about 60% of the errors, if I recall correctly.
Okay. But some of my students are creating interesting ensembles of very, very basic linear models, and I'm curious to see how they perform. The early indication is that it will be above average, but I don't want to put a number on it. 19 of my students just finished their production models, so we have 19 new accounts. Some of them already asked me if they could continue to tinker on their models now that the official project time is finished. And I told them, hey, you can make 10 accounts, so keep your production model stable, don't change it, and just create new accounts. So welcome to the tournament, guys. They'll be around. Hopefully they stick around. Trying to find a retention ratio. You know, when you're an undergrad and you get a project assigned to you, yeah, you complete the project, and then you stick around with it. That's the real question that I have. Yeah, so 19 new people coming on board, and some of them are going to make additional accounts. Excited to see that. Yeah, Boris's cred is crazy, and that's interesting. I agree, it is. It's very interesting. I'm going to jump to some questions, and I'm going to also rely on my panel of experts here to help me answer them. And Joaquim, you ask some good questions. I like when you put questions in because they're always really good. The first one that got ranked the highest is how much live data is needed to evaluate how overfit a model is. Is a month long enough? How confident can one be with even 12 months of live versus 12 months of validation? Yeah, it's a great question. So 1 month is definitely not long enough because you're making predictions that are a month long every week. And so you're basically making the same prediction 4 times. And so you basically need 12 weeks to even think about possibly sticking with a model. And also if you start off in a burn period, they tend to be autocorrelated. So you can have 4 to 8 weeks of continuous burn. And if you encounter that, you got to wait until it turns positive and see how everybody else does. And so I haven't had the real opportunity until very recently to kind of experience entering the tournament during a burn, but I would want to know, okay, if everybody's burning and so am I, who recovers first, right? Do the traditionally best performing users come out of the hole stronger, faster, or what? Or do I hang down in the burn group for a longer time? So if I burn longer than some of the top performing users, that is an indication that I'm not doing so hot. And so you still can draw some inference from it, but that's like not scientific at all. That's just kind of a gut check.
That makes sense, though.
But yeah, definitely 1 month is not long enough. And how confident can you be with even 12 months of live versus 12 months of validation? Not very. This is stocks. This is equities. We have no clue. And look what happened with COVID-19. I mean, it's kind of nuts. There's a huge regime change going on right in the middle of all of this. And we have to hope that our models can survive regime change. And that actually gets to Kino's question toward the bottom, but I'll touch on that separately. Anybody want to pipe in on that one? Talk about how long do you need to evaluate a model before you make any changes? I'll pick on somebody.
Yeah, I can go for that. I mean, I've been here since 2016, and in the beginning, I was changing my model every week, and it did not work. I had no idea if it was me or if it was the market or anything like that. So I've started getting to the point where I think I've got something, and I leave it for 3, 4 months, 5 months before I go back and look at it. It's just, yeah. I'd rather create more accounts and try other things on other accounts and then go back to the original one. So yeah, I'd say 4 months at minimum.
I agree. One thing I told my students too, this was back when the 3-account rule existed. I said, create 3 different accounts. And then over time, kill the lowest performing one. Just delete it and try a new one. And so if you have your own evolutionary process, similar to what Bohr's doing, but more manual, I guess, then you will always improve. And so that kind of keeps you constantly innovating. And now that we have 10, maybe you kill the bottom 3, right? I don't know. That's just something to think about. Like right now I have a flippening, so my account leverage is higher than my account arbitrage. And I didn't think that was ever going to happen because arbitrage has always been very, very strong in the tournament. Now I'm kind of questioning if I should expand on that particular model's performance and see if I can tweak it. But if arbitrage were to follow the bottom, I'd kill it, no problem. I also tell my students with trading, you know, there are no sacred cows. You have to be willing to drop something that's not working. So I guess based on what Rudy is saying and what I've said, I hope I've answered your question, but yeah, longer time frame and follow like kind of a manual evolutionary process. I think that would be beneficial. So I have a question from Mark. Okino saying the only difference between screwing around in science is screwing around in science is writing it down. Yeah, yeah. I call it economagic. Yeah. Mark is saying, is the Numerai's influence on the market itself big enough to make a drop in correlation of our models on live data due to obvious signals from trained data already utilized? So I think what you're asking is, if Numerai is trading on our predictions and then squashing the ability of those signals to generate profit. I'll say no. And then I'll also jump to another question. Let's see if I can find it real quick. Oh, then toward the bottom, has Numerai ever revealed its yearly profit numbers or given any indication? Curious as to if the experiment is working, experiment being the meta model. So I can answer both of these in one stroke with a very simple observation. All hedge funds that trade equities have to file a 13F once they've reached a threshold. I think it's 125 million assets under management. Numerai does not have a 13F. We can infer that Numerai is not a large hedge fund, and as such, I don't think that we're moving the market. So that's my hunch. Richard's in here, so if he wants to chime in, he can, but I feel pretty confident that I sufficiently answered that one.
Is that total capital, or is that assets under management, or does that include leverage?
That's a great question. This is assets under management.
Okay, gotcha.
But yeah, that's a good question. No, I haven't studied hedge funds in some time, but I do not believe that reflects leverage. So just assets under management. Either way, once we see that filing come out, we'll have a much better idea of the size of the hedge fund. Having an aggregate fair market value on the last trading day of any month of any calendar year, at least $100 million. Okay, thanks. So I assume you Googled it while I was talking. Thanks. Appreciate that. You know, it's like my sidekick over here helped me out doing the Lord's work for me. Thank you. Thank you. So Mark, I hope that answered your question. Yeah. Okay. He's giving me a head nod that I did. But yeah, that's a scale thing. Also, we have a question on, was round 202 considered a difficult round? Yes. I think that was around the time that everything was correlated. Gold sold off, Bitcoin sold off, every equity in every market sold off, bonds sold off. The only thing that did anything positive was treasuries, and they barely moved because the yield's already practically zero. And when correlations are 1, everything blows up, right? Nothing works, and we should expect that. I was just very happy that we only had my own score was like -3%. I was very pleased. That could have been a lot worse.
Sorry, any
No, it's okay.
any era that correlates with 202?
I would probably suggest in the middle of the training data, there appears to be some difficult eras around that time. But here's the thing. The hard eras seem to be fairly rare. I suspect that there are models out there that kind of purposely fit to the high volatile periods. And I suspect that what they're doing is purposely fitting to the difficult eras and kind of ignoring I call them the easier eras to predict. But that's also why back in the day when the volatility of our performance was very high, they do really well and everybody else was burning, but then they'd never do well after that. Now that the data is more balanced, it doesn't seem to make sense to try to purposely fit to the difficult eras. But we should expect to see eras that just kind of make no sense. Like, what the heck? Like, I was doing really well. Like, I don't see any obvious signs in the news or in any kind of market indices that show that there's some kind of crazy volatility going on. But yet we'll still do very poorly.
You mentioned era 60 to 90 were difficult ones. Do you know roughly what years those were?
I don't. They've never officially told us when the time period starts, and we can only guess. I just have noticed that the middle third, let's call it the middle third of the eras, seem to be rather difficult. And yeah, I wouldn't even know how to extrapolate that back to an actual time series. And I'm not sure it really matters. While it is chronological, we shouldn't necessarily care because we just don't know enough about the data in the first place. So I'm very cautious to try to align the time series with any actual news or events because that could introduce bias. Yeah. And I'm kind of big on not biasing myself. So, especially.
I'm just curious, really. But
me too. Every time I see Richard, I'm asking him every possible question I can, and he always just kind of laughs at me and thinks I'm an idiot for even bothering to try. But you know, so be it. But yeah, 202 was definitely difficult.
Actually, I have finished this era with positive correlation in top 95 percentile, and I have tried some idea in this prediction, and only thing I have done is just futures selection. So I don't know, is it random or not? It just was one time idea checking in this era and it was positive. So I'm not sure what should I do with these conclusions or something, but okay.
Yeah, I mean, how do we use this? Because it may work for 3 months and then all of a sudden you're in the bottom 1,000. Not bottom 1,000, we don't have 3,000, but like the bottom tercile of users because you found some signal that worked for a couple of rounds and then it disappears. Michael Oliver, I'm just picking up on your chat there. You have a counterpart model that had positive correlation in 202. Yeah, it's kind of similar though. We don't know if that's a spurious correlation or if that's an actual signal that can be utilized. I'd be interested to see though if you averaged those two models together as a third evaluation to see how they would do.
Yeah, I've considered that. I just hadn't done that yet. But yeah, because I mean, that's basically just trained on the disjoint set of eras from the other one. It's a linear model just trained on the other set. And so they're not quite mirror images of each other, but the idea was to capture two different regimes. And the trivial model just in the past does well when everyone else is doing really badly. And it does, but that's not most of the time, and so it's not that great of a model overall.
Right.
But when everyone else is burning, it does pretty well.
Yeah, I just can't figure out the reason to do that now, especially when long-term positive performance is desired rather than short-term high performance.
Yeah, exactly.
But you know, to each their own.
I mean, that's why neither of these models are staked on. They're just kind of tracking. I just think they're kind of interesting data points to see how things are changing over time. This is a sort of tracking regimes of the market type idea.
So I'll ask my panel of experts here. I'm gonna go to the Mike and Michael Oliver and Bohr and myself. So we're allowed to have 10 accounts. Do any of you plan on spreading your stakes evenly across the 10, or are you gonna stick with what you know?
For me, I think it's too early to say at the moment. I've added, I think, 4 more accounts that I've had ideas with long time ago that I wanted to try out. And I'll leave those for the next 4 months and see how they do. So yeah, I might, depending on how they do, I might do that. But yeah, at the moment, I'm just sticking to the original 3 that I had. And I know those work in different regimes. So.
Mm-hmm. The one thing to consider, of course, if you do plan on staking it eventually, is that you're just, every day that you wait, you're adding another 100 days before you can earn reputation. So That's the only,
Yeah, exactly.
that's what I'm struggling with is I staked early on 3 accounts, and I staked right in the middle of a burn sequence. And so I haven't broke even yet. And that kind of hurts, but at least my bonus will kick in sooner. I just, I don't know what to expect, but let's extrapolate a little bit. Let's say we're 20 weeks out. All 10 of your accounts are in a decent range, in the top 300. Are you staking evenly on all 10, or are you sticking with your known best models?
I'm definitely going to stick with what's been working for my biggest stakes and kind of gradually increase stakes on things, give them confidence, and potentially switch models, if something looks like it's better overall, I might switch it to one of the higher stake accounts.
Yeah, that's true. I guess you could technically switch your stakes by merely changing your submission files. I didn't even think about that, but yeah, that would kind of blend out your reputation series too. Huh, that's interesting. I gotta think about that some more. I gotta stop talking out loud and giving out my ideas. So, Bor, what you're asking, what are your plans to improve your model's performance? You're not asking for secret sauce. Come on, yeah, you are. But would be interested in the direction of your and others' thoughts. So how am I improving my performance? So it's kind of goes back to this idea of manual genetic selection that I was talking about, right? Where I have my known accounts and I have ideas. I'm always thinking about ideas. I'm sure all of you are too. And I'm just going to kill my worst performing model. I'm also considering volatility as one of my parameters. If I have a performing model, but it just keeps switching in and out among the rest of the ranks, I might kill it because it's too volatile. Because to me, that's not very good. And in terms, geez, how am I improving my model's performance? It just takes so long to iterate on this stuff that I'm not trying to get big incremental gains. Like maybe for the next year, I would like to see 3 of my accounts enter the top 50 for a cumulative time frame of 9 months. How about that? Or something more meta than that even. All 10 of my accounts to be in the top 300 for a full year. And then, incrementally try to move from there. But how will I achieve that? I can't think of any other way than to just kill the worst performing one in some kind of death match of my own 10 models. I don't check correlation among my models because I don't care about that. I'm just looking at raw performance. How about you guys? Anybody else want to pipe in on that? Boris says good answer. Oh, okay, cool.
Yeah, I think I'm going to do pretty much the same as what you've been discussing. I think it's such a long game that keep the things that are working and then just kill off the ones that I see don't work after about 4 months of just letting it ride. And that's why I haven't filled up all 3 or all 10 accounts yet. I've got 3. I've added 4 more with ideas, and then I see how those go before I start adding even more. Because it's just going to take too long.
Yeah, it is. It's going to take some time. I'm up to 7 now, but I have no idea what to do with the other 3, nor do I have a whole lot of time. SSH was piping into. He says keeping 90% at one major stake, and well, I can't quite make sense of the other part, and around 10% on the other 2. Richard wants to know how many of us plan to stake on MMC. I'm on wait and see mode. I'm not going to say yes or no to that.
I mean, they're going to change to MMC2 too, which we haven't even seen yet. So we have to see that first.
Yeah, I want some more info.
I was looking at MMC2, and it does look a little bit more stable from what I was seeing. I only looked at a few users, but it does seem to me like, whereas you're kind of at the mercy of the market with the normal tournament, like you're going to burn if there's a big burn period. That's not necessarily the case with MMC. And so part of me has concerns that we might get sort of maybe a year from now, 80% of the stakes are on MMC.
Why is that a concern though?
Well, it's not a concern. It's it would just be strange. It would just be like the tournament changes its whole character, and it's not really about modeling the data. It's also about kind of knowing what others are going to do.
That would be a concern. That's kind of like how I was talking about how I try to chase MMC and then other people stumble into the same solution. And so our share of MMC goes down because we're correlated together.
Yeah.
Yeah, no,
But
I can see that.
You guys said earlier that you think it's quite volatile. It doesn't seem as volatile as the normal returns of, like, if you look at the black line and the blue line on the submission page, usually the blue line's a little bit more compressed than the black line. So it seems to me to be less volatile. And often if someone has had, say, 80% of weeks be up on the normal tournament in their MMC, they'll be up 90% of weeks. So it seems like it might be quite compelling for a lot of people.
Yeah, like I said, though, I just don't know that I can stake on both because my MMC is correlated so strongly with my tournament performance. So when my model does good, I get high MMC, and when I burn, I get negative MMC. And so for me, it doesn't offer a diversification, but maybe MMC2 does. I just don't know. That'll be interesting to see. Any way I can reduce my risk, and whether that's betting on a side pot, is beneficial to me. And so that's kind of what I'm waiting to see. I'm going to try to get through a couple of questions because there's been an important discussion, I think, going on lately that I want to touch on. Let's see. Hold on a second. So Kino is asking, slightly off topic, but although I think it's relevant, what do you or others think would kill the project? And why is there no real competition out there? Well, Kino, what would kill the project would be some kind of regime change in equities that invalidates all of our data, right? So if some kind of capital controls are put on and you can't invest in foreign markets, and since this is a global equity tournament, that would be a regime change that would kill the model. And that would invalidate all of our models. It would all start over, et cetera, et cetera. I think that would kill the tournament. There's also extreme legal risk in terms of regulation. So if for some reason cryptocurrency cannot be used as a compensation mechanism, that kind of screws things up pretty bad too. And yeah, those are kind of the big known unknowns, if you will, or what is that? I forget the order. Is it unknown knowns or known unknowns? I know they're different, but I forget. Wait, because we know that regulation is a risk, but we don't know when it could happen. So I think it's a known unknown. Forget it. I can't remember. But yeah, so I think that's what could blow it up. And that's pretty much all I got for you. Those are my concerns. Go ahead, Kino. I see you.
How about a competition? It's like I don't see anybody else doing this, so I don't know if it's because it's too early, or maybe it's because people are scared or they don't see the value in this. I mean, I personally see the value in this, but I also think that what we're being given from Numerai is a very opinionated problem, or like opinionated solution to like dealing with the markets.
Yes.
So it's only one. There's like many, like, I mean, if you want to go by momentum trading, for instance, which everybody here usually hates, but or like something more like into fundamentals, or like multiples and so that sort of things, or like maybe on like like debt and junk bonds, whatever. I mean, there's like a ton of things, but like I just don't see any variation out there or any other project. So I don't know. That's something in the back of my mind that I don't know how to explain.
No, I think that's fair, and I'll add another one. What if Richard gets a call from BlackRock, and they're like, "Hey, Richard, we want to buy your hedge fund for $10 billion," and they buy it, and then they'd shut it down because they found the edge, and they're like, "Now we're just going to buy them and close them." Because isn't that like a pretty standard business model nowadays? You buy your competition and close them. Apple does it. Google does it. Why wouldn't another hedge fund? Richard's laughing. What do you have to say, Richard?
Well, that's why I have more than half the shares and control the board of the company.
Aha.
And and I don't mind investing in my own rounds and own token, and it's because I don't really want that to happen.
Yeah, but come on, if somebody called you and said, "Hey, we're going to give you $10 billion to buy your project," that's going to be a very tough call to turn down.
Nope.
Oh, confident.
It really
I
wouldn't
like.
be.
We're never
It's like, well,
selling.
do with us. Yeah. Yeah.
I'm not leaving. I omitted a word there. That's a Wolf of Wall Street reference.
It's not about the money, it's about the vision.
Well, but it is about the money. I mean, come on, we're capitalists here. It's always about the money. There's a number. Everybody has a number. I refuse to believe that. There isn't a number that you would take to shut this thing down, or at least not knowing that they were going to shut it down. How about that?
Well, that's why a lot of it's open source, and we talk about all the stuff. So even if someone did buy it and shut it down, which is impossible because we wouldn't sell it, but even if they did, you guys would just rebuild it with the code we left behind or something.
Yeah, no, that's true. With Erasure being open source and existing decentralized in that way, yeah, I can see that. It's an interesting thought experiment, to be sure, and also very interesting that you're that confident on the project overall. I think that we should put that on an auto bot in Rocket Chat, especially when people come in and try to FUD. But that's very helpful. Okay, so I'm going to try to take another question. Is live Sharpe ratio versus validation Sharpe ratio a good way to measure how overfit my model is? I would say that in general, yes, you can determine that. But the actual direct measure that you suggest in the second part of your question, no. So does the live Sharpe ratio of 1 versus a Sharpe ratio of 2 in validation equal a 50% overfit? No, because that could just be spurious correlation. It may just be that some way that you have the high Sharpe in validation doesn't reflect one live, but that doesn't mean that you're completely overfit. There's some other thing going on in your model that isn't captured in that measure. But yes, in general, comparing your in sample versus out of sample will always give you an indication of whether you're overfit, but it's not a direct measure. I'm not aware of any way to do that, and if we could hack the data basically. And then you're asking if my model performs better or worse live versus validation. How can I determine if it's due to over or underfitting, or due to market regimes liking or disliking my model and feature exposures? You can't. Because it's live stocks. I was trying really hard to come up with something smart, but no, I don't think we can infer too much about that, because the validation is such a small piece of the data. And we're talking about equities that change by the minute and our timeframes on a month. So yeah, I think it's just more of a random hit there. And that's why I encourage my students to take a long view on this and try to get performance that's stable. And I would encourage that for anybody walking into the tournament in today's regime. When is multiple accounts when is SAMM coming out? Anson, can we consolidate to a single email yet?
Yeah, it's coming soon. We're working on it right now. The back end, I don't know if you guys are just like following our API. You can see that we're slowly making those changes. Right now, we're just putting on some of the final touches to make sure that account merging and creating new accounts makes sense in the front end. It's taking a little bit of time to make it look good and usable, but it's definitely coming. It's one of our big priorities this quarter.
Okay.
Any feature requests while
Yeah.
we're at it?
I definitely have some suggestions, and that was why I wanted to get to the questions so that I could spend a little time using my podium here to preach from on high about our ability to withdraw stakes in that short time frame on Wednesday night to Thursday morning to either maybe pawn off our reputation bonus directly into our wallet, to pare down our stake or something like that. I know that this has been talked about in Rocket Chat. I'm an advocate for it, and that's my #1 highest priority suggestion for a change.
Yeah, so this is something we've been talking about a lot internally as well. So let me just get it straight. What exactly do you want me to build? If you were like my boss and you're just giving me a spec, you want to be able to, yeah, can you say that again?
On Wednesday, when I get my results, I just got paid. I want to have the option to take my profit and siphon it off into my wallet, or to roll it forward. I want to have a time window, whatever I don't know what the time frame is, so I can't tell you what I want. 6 hours. I want a 6-hour window where my stake is not active, and I can choose to roll it forward or to siphon some off as like a profit, because I don't necessarily always want my stake to increase. Like I may have a ceiling of stake value that I want, and the rest I want to slice off and go to my wallet. But it seems like there is a time window after Wednesday's results are posted and before Thursday's stake is locked in that I can kind of slice off some of my risk.
Yeah,
especially not a 1 month rolling window. I think that is definitely flawed right now.
It could even be set to be automatic so that you always take a certain % off or something like that.
Potentially.
You don't need to actually check it every day within 6 hours. If you just set it and forget it, just have it go continuously.
Yeah, I think that makes a lot of sense. I was just reading through that long discussion on Rocket Chat. It sounds like maybe what we want is just kind of like a checkbox that says take profits or automatically roll profits into stake. That might be a simple enough change. But yeah, I'll look into it. We definitely hear your feedback there. We'll look into it. I think in terms of timing, when it's going to come and all that stuff. So right now, Patrick is working basically full time on making the multiple account experience make sense. So he's doing that. And then Michael is working full time on designing MMC2 and MMC2 payouts. I think we'll probably group together any changes to staking rules and staking timing when we launch MMC2, which is going to be sometime in this quarter. So yeah, just watch out for that. It'll probably come soon.
Okay. Another feature request, not really a feature request, but it's been about 3 months since the last Fireside Chat, and Office Hours with Arbitrage is not a substitute for Fireside Chat. I would just like to state that publicly while we're all here. And so when is the next Fireside Chat?
I feel like we were supposed to have one next week.
Now I'm going to yield back my 5 minutes. I have 5 minutes left, and I just asked when the Fireside Chat would be, and it sounds like we're going to do it Thursday. So I'm cool with that. We could even, I could do it after or before. I'm indifferent, but I'm not yielding my hour. I'm keeping my hour. That's my only requirement. So thank you, by the way. I'm at my 1 hour hard break. So I'm going to go ahead and say, adios, amigos. We'll see you next week. Thanks for joining.
Bye.
Bye, John.
Bye-bye.
Bye, everyone. See ya.
Cheers, guys.